Australia's business channel. This is Mediaweek.
Hello, welcome to the program. Ahead, we'll find out whether the online advertising market is set to surpass its own revenue record once again. We'll be joined shortly by the head of the Interactive Advertising Bureau, Paul Fisher. The Lifestyle Channel's Nicole Sheffield will also be joining us, fresh from scooping the prize pool at the AllStars. Plus, we'll have all the latest ratings and find out why Optus has fallen foul of the free TV lawyers. But first, Tony Blair has weighed into the phone hacking scandal debate on a visit to Australia. It follows criticism of him and Gordon Brown that they were too close to News International. The former British PM says it's all very well to say to those who make those accusations, but they are made, of course, with hindsight.
You know, if you tried having this debate a year ago, it would have happened in a slightly different context. Look, I think it's for any political leader who's been operating in Britain the last 30, 40 years, the power of the media is such, you can't not have a relationship with people who are major and powerful media people. And by the way, that's not limited to News International. I mean, there's this slight sense in the UK where it's all about Rupert Murdoch and News International. That's true of any of the major media outlets. So I think you're bound to have a relationship, but I think it's a lot easier to have the right type of relationship and a healthy one if it's clear that there is a real distinction between news reporting and commentary, because that's what creates the difficulty for the political leaders. You know, where they're in difficulty is if papers or news outlets are used as instruments of politics, then, you know, you're pretty vulnerable to that. I mean, I'm talking to you now, I'm communicating through Sky, right? What you put on of what I say, what commentary you put in around that, that matters.
Tony Blair there speaking with David Spears, and for the latest on Hatgate, James Manning is with us in the studio. He's the editor and publisher of Mediaweek. James, interesting, we've got Tony Blair weighing in. I mean, this thing's just gone right to the top. It really seems to have come off the front pages pretty quickly. Yeah,
well, it's only a week, isn't it? We said it might be, you know, it might slow down a little bit, but there's been some other significant news events that have pushed it off the front page. It's becoming more of a business page story now, and that's probably, I think, where it'll stay for most of its life, depending on what's uncovered in the weeks to come.
Moving on to another story, Ogilvy has announced it will change the way it measures the effectiveness of its PR campaigns. From next year, the group will drop the advertising equivalent value metric, which measures the amount of media coverage generated by PR against the amount a client would get for paid advertising. Now, it came out of jointly commissioned research, which also found a lot of support for dropping the term PR from the media lexicon. Ogilvy won't be doing that, but says the age of spin is over. I'm keen to get James Manning's view on this story, as well as our studio guest today, Paul Fisher, who's the Chief Executive of the Interactive Advertising Bureau. Gentlemen, welcome to you. James, I'll just ask you, first of all, this story about Ogilvy. It's an interesting one. Maybe just explain for us how PR actually measures what they're doing.
Sometimes the pitch, a PR company will go to a client and say, look, you're spending, you know, $50,000 on your media time. Give us that much money and we'll get you $100,000 worth of airtime. Some people use that as a measure to win business. Some clients demand it, you know, what they want to know, so they have to do that calculation. So
they're kind of saying that being spoken about in the media, in the news primarily, but, you know, in other ways, is worth the same as or more than a straight ad.
Yeah, absolutely. Yeah, they value, just as simple as measuring the size of the free, you know, the free, if you like, airtime they get on TV or radio or print coverage in newspapers and magazines.
Paul Fisher, is measurement sort of across the board, do you think, in the media and particularly in your space, changing?
It is changing rapidly, Kylie. Everyone wants to measure everything at the moment, and there's certainly a lot of debate about online being the most measured versus the most measurable media. We've just announced the winner of our measurement tender for online audience measurement, the Nielsen company, and we're now looking at actually rolling out a wholly new measurement system here in Australia, which will be people-based rather than browser-based. And I just think it reflects the growing desire of clients, in particular advertisers. They want to know where their spend is going, and they want to see what the return is. And I think what we're heading towards inexorably is a cross-media measurement landscape, whether that's PR, whether it's television, radio, online, or all of the above.
Being the most measured medium of course, has its challenges, doesn't it? Because there's lots of controversies about what are they actually measuring. People leaving browsers open, does that account for, you know, refreshed ads, stuff like that? What are some of the big things there that need to be sort of, you think, sorted out?
The biggest one, James, is taking away from unique browsers, which is a browser-based measurement. You know, there's 120 million unique browsers a month in Australia, which is not bad for a population of 20 million,
so
of which only
7
exactly UBs.
Yeah.
And the first thing to do is get that back to a people-based figure. So there'll be another metric which will say this many people actually were on the website, or this many people were on the web that month. That's the first one. And I think the second one then is to bring in a range of metrics and a methodology that can truly be measured with television, with radio, with print, and eventually deduplicated, so you can get a true overall reach or multimedia reach and frequency. And then, of course, the great thing about online and digital is you get so many other metrics that you can add on to that you just don't get in other media.
What will Nielsen be doing? You said you're just appointing them. What will they be doing that's different to what's being done now?
They're rolling out what's called a hybrid measurement methodology. Without getting too technical, it's taking the best of both worlds, a panel-based measurement system and a server-based measurement system. It's one of we'll be one of the launch countries in the world, so Australia is very much leading the way. But the ultimate result really is the most accurate online measurement that we've ever had in this country over 15, 16 years of the industry, and arguably one of the most accurate measurement systems in the world.
Your ability to accurately measure the people that see the advertisements leads you to be a very fast-growing sector. Give us an update on where the dollars are going. I mean, you've been sort of outstripping most media for quite some time. Have you slowed at all?
No, we haven't, and yet a lot of people are waiting for that to happen, but we're growing at about 21% year on year at the moment, so that would take the first 3 quarters of the last financial year. We're waiting for our final full year figures to come out in a couple of weeks from PricewaterhouseCoopers. The anticipation there is that the year will finish up at about $2.5 billion. That'll reflect about a 20% year on year growth. Put that into context, the industry is growing about 3 or 4%, certainly low single digits. TV and outdoor and newspapers are growing around 4 or 5%. So to see a 20% growth and to see that year after year after year is quite significant. The forecasts that we're seeing are seeing probably around about a 15 to 16% growth per annum each year over the next 3 or 4 years. So we still think it's going to come back a little bit off the 20% growth, but it's still going to be in the very high, in the mid to high teens.
You mentioned there, what, 2.1 billion, I think it was, 2.5.
Oh.
So talk around, you know, that you're headed towards a $3 billion number for an annual online spend. How far off is that likely? I suppose all you have to do is extrapolate the 20% growth.
Yeah,
you can do that for us.
It's going to be around December, end of next calendar year, 2012. I think we'll probably hit 3 billion. And then from then on, the conjecture is between 2013 and 2014, it'll hit between 3.5 and 4 billion. And at that point, it will then take over TV and newspapers and become the #1 channel or medium by advertising volume and by share as well. It'll be about 23, 24% of all advertising will be spent in online.
So is there a plateau in sight?
There's a plateau. I don't know where it is. Look, I think when we get to around about a 25% share, up around the 4 billion plus, I think that's when you're going to start to see probably high single-digit, maybe low double-digit growth, probably around about the 10% mark. But I have to say that's pure speculation on my part.
Tell us what's growing quickly. I mean, we're seeing a lot more video online now. Is that bringing in a lot more revenue? And that brings with it some controversies too. Some people don't like those autoplay ads and stuff like that. Yeah. Do you get involved in that side of it?
We do, and look, you know, what we're trying to do is create an infrastructure and some standards and procedures and guidelines and best practices for people to help make this a sustainable growth. You get consumer input, there's business input, and obviously with that rate of growth, you get a lot of different opinions. Video is certainly a huge driver, and of course the attraction to advertisers is combining their television advertising campaigns with their online by using online video. So that's very attractive, and we'd like to see the FMCG, automotive and retail industries use that a lot more, and we're starting to see that more so overseas than here. So video is a big driver. We're still seeing a lot of money come into search. and that's always going to be a powerhouse, I think. And displays going very well as well, as are online classifieds. So really all three sectors and a variety of industry sectors are still powering that double-digit growth. You mentioned search. What's your relationship with Google like? I know that they're not necessarily involved with a lot of the industry bodies. Yeah, well, Google's an IAB member here in Australia, and the new managing director there, Nick Leaders, a former boss of mine at News. I know quite a number of the people at Google, so my relationship with Google isn't maybe as broad as we'd like it to be, but Google are very active in supporting the IAB. We have our IAB Awards tonight. I know you're going to be talking later on about Astra. So we'll have our awards tonight, and Google have sponsored that. So they certainly are supporters, and they certainly are active.
With the sort of traditional print media, if you like, sort of looking to move into digital areas, I mean, what happens with the measurement of newspapers being read on, like, iPads? Does print lose that sort of dollar value, and do you pick it up?
I was going to say that, because you could say the same for TV. You know, if people are going to be watching their favourite programs online, when you measure that, is that necessarily being taken away from TV advertising? It's a great question. I think we've got to sort this out, because it's not really resolved yet, and maybe there'll be a turf war. But the reality is that I think that, you know, common sense will prevail, and it's not about, I think, anyone taking something away from somebody else. I think it's about counting the consumers, whether they're viewers or readers, accurately, and then being able to put that information in front of media planners and buyers, and of course advertisers. I just wanted to ask you quickly before we let you go, because there's another story. It's going to outstrip Gate. It's called Airbrush Gate. Oh, so we've seen some L'Oreal ads taken off the air in the UK today, because basically saying that the ads are misleading because they airbrush. I mean, don't they all airbrush? Yeah, I know. I'm just surprised how obvious it is sometimes, and that there's not more of a backlash from the readers, I guess. Well, I think... I don't know if it matters that much, but... I'm sure everyone knows. That's the point. Do you get involved in stuff like this in the online space of advertising? It's not really your... The nearest I get is my wife buying the magazines and actually seeing the pictures where they put them when they're airbrushed and when they're not. No, look, I mean, there are obviously advertising standards that we adhere to, but in terms of airbrushing, this is the first I've seen of something like this. Get the politicians getting involved. Anyway, Paul Fisher, enjoy the awards. We'll obviously probably be talking about the winners next week, but good to meet you. Thanks for coming in. Thank you, Kylie. Thanks, James. Another major media story on the boil this week is, of course, the ACCC's preliminary finding on the proposed merger of Foxtel and AllStar. The consumer watchdog shocked the market by postponing its final decision, saying on the evidence it currently has, the deal would significantly lessen competition. Both companies have vowed to fight the decision, saying the ACCC has it wrong. Chris Weston from IG Markets has been following the story and the impact on AllStar's share price.
Yeah, good afternoon. Obviously, we saw the rejection from the ACCC on Friday afternoon. I think since that time the stock's dropped from around 129 down to where we are at the moment, about 106. So that's nearly an 18% drop-off. I think things could have possibly been a bit worse. The market was probably only giving it about a 60 to 70% probability. So certainly, if the market had been filling it a full takeover, then obviously we could have seen a bit of a drop-off. But I think the view from the ACCC is the acquisition is likely to result in a substantial lessening in competition across a number of metrics. So that's a very interesting scenario in itself. But I think if you are trading the stock, if you are investing in the stock, you've now got a chance to really reverse back and think about the fundamentals. Obviously, the stock's not trading on that takeover premium anymore. The first quarter for the company, if we remember, was very, very tough for these guys. Obviously, we saw what we saw in Queensland with the weather really disrupted their residential subscription numbers, which dropped off reasonably significantly. We saw a churn rate of 1.7%, and now you've basically got a stock where the analysts are a little bit mixed. Of the 12 that I've seen, we've got 4 buys, 4 holds and 4 sells. The consensus price target in the market now is around 118, so not a huge amount of upside from current levels of 106. Tomorrow is going to be an interesting day. We've got the results coming out, their second quarter numbers, so a good chance to see really how the company's tracking. The market's looking for about 10.9 million in terms of net profit pre-NRIs, which would be about a 14.7% uplift. But again, you've got to revert back to looking at those pay TV metrics. Now, we're looking for that churn rate to be around 1.35%, which is obviously, as I say, down a little bit. We're looking for total subscriber numbers around 765,000. We're going to see an increase of about 10,000 from the first quarter, reversing that drop that we saw from the first quarter, where we saw a 9,000 decrease. Obviously, looking at that commentary, there's going to be a lot around the ACCC's decision, and the ACCC decision, remember, does actually come out with a final decision on the 8th of September. I think given the consumer confidence numbers, which were recently down quite significantly, down about 8 or 9%, you know, the outlook for the company, which their commentary will be relatively subdued. There's not a huge amount to like about the company at these levels. I think the valuation on enterprise versus EBITDA ratio is about 6.7 times, which is pretty much in line with other pay TV companies. So I think we'll probably see the stock look to trade sideways for the foreseeable future.
Coming up on Media Week, astronomical. Lifestyle boss Nicole Sheffield joins us for a chat about her scoop of the Astro Awards pool. We'll be back in a minute.